What if I told you that one investment tool lets you own hundreds of companies, costs almost nothing, and requires minimal effort?
Sounds too good to be true, but that's exactly what ETFs do. And today, we're breaking them down in just 6 minutes.
Let's get into it.
Welcome to the Neurobiz Podcast channel. If you're new to investing or just tired of overcomplicating it, this video might completely change how you think about building wealth. Let's start simple.
Okay, I'm ready to hear it. Yeah, absolutely.
An ETF or exchange traded fund is a basket of investments, usually stocks or bonds, that you can buy and sell on the stock market just like a regular stock.
Instead of buying individual shares one by one, an ETF lets you buy a ready-made portfolio in a single trade. Makes it much simpler. Some ETFs hold hundreds, even thousands of companies. That means instant diversification, which is one of the most important principles in investing.
This idea is strongly aligned with lazy investing philosophies, not lazy as in careless, but lazy as in efficient. Now, here's where things get interesting. Not all ETFs are the same. The most common type is an index ETF.
These track an entire market or index, like the S&P 500 or a total market index. The goal isn't to beat the market, it's to match the market. Historically, that's been surprisingly effective over long periods.
Yeah, that's right.
It sound exciting, and they can be, but they're also more concentrated. If that theme struggles, so does the ETF.
Right.
That's why many investors use index ETFs as their core and thematic ETFs as a smaller optional add-on.
Now let's talk about the real reason ETFs are called the lazy investor's secret weapon: cost efficiency. Most ETFs are passively managed.
Exactly. No picking winners.
That means more of your money stays invested and compounds over time.
Right.
ETFs are also known for being tax efficient, which can quietly improve long-term returns compared to traditional funds. So why do so many long-term investors rely on ETFs?
Well, it really boils down to three key things: overtrading, high fees, and emotional decision-making. ETFs encourage patience. You're not reacting to every headline or earnings report. You're investing in the broader trend of economic growth.
Absolutely. It's about the long game.
Yeah. That mindset shift alone can dramatically improve results. Here's the takeaway. ETFs are simple, diversified, and low cost. Index ETFs are ideal for long-term core investing. Thematic ETFs can add flavor, but shouldn't dominate.
Absolutely. If you want a smarter, calmer way to invest,
ETFs are worth understanding deeply. If this video helped you understand ETFs more clearly, hit the like button, and it really helps the channel.
Subscribe to the Neurobiz Podcast channel for more simple, practical investing insight.
Let us know in the comments, do you already invest in ETFs or are you just getting started?
Thanks for watching. We'll see you in the next video.
Looking forward to it.